today I just quickly want to go through 3 stocks I'll be taking a look at next week to do some swing trading dividend capture with. These are also good stocks for a buy and hold strategy as well, in my opinion. And as you guys remember from my prior videos, I only like doing swing trading, dividend capture, and stocks I'm more than happy to hold for the longer term. So if I establish a position, if I am not able to get out of that position right away, more than happy to hold it for a number of weeks, number of months, or even longer if I have to. And while I'm waiting, I can pick up that nice dividend yield as well. So that's really what drives the strategy behind the stock trades that I do with dividend capture or swing trading. Basically, buy and hold stocks that I think will have some short-term momentum, movement, and or a dividend capture where I can get in, get the dividend, make a little bit of capital appreciation on a swing trade, and then use that capital on another stock with a kind of similar background and similar trading strategy. So that's really what I've been doing with my dividend capture swing trading strategy. Basically buy and hold long-term stocks that will have some movement or a dividend coming up to get in and out of a trade. So having said all that, let's jump into the 3 stocks here. There's one blue chip stock, a couple of blue chip stocks actually, and then one more riskier stock, and that one is up on screen right now, MAIN, Main Street Capital. I've talked about this stock in a number of my prior videos. This is a business development company, much like Prospect Capital, PSEC, a stock that I've also done quite a bit of dividend capture swing trading with in the past as well. And typically these business development companies are fairly risky. They often move up and down quite dramatically with their stock price. You can see here, this is a company that provides customized debt equity financing solutions. So it's very susceptible to macroeconomics in play in the overall market, as well as interest rate hikes as well. And there will be an interest rate hike coming up, I think in the next month or so. So you should take that into consideration before jumping into the stock as well. Over the last 5 years, though, you can see here, as a lot of the other stocks in the market have been doing with this record bull run here, this has kind of climbed here quite dramatically here, actually. Over the last 5 years, it's up 80.85%, but over the last year here, you can see it's up 12.54%, which is quite remarkable. And this particular stock will be having an ex-dividend date on the 18th of next week. Payment date will be in February 15th, that is. 19-cent dividend, representing about 6% or so overall dividend yield. You can see here the last dividend yield was 5.956%. It's got an okay PE ratio for this particular market class, this market segment. It's a very large company as well, $2.24 billion. So I think this would be a great stock, a longer-term hold buy-in stock as well, but very, very risky nonetheless. Not as risky as a Prospect Capital, but still has a little bit of risk with the stock price as well. But this is definitely a stock that I am going to be taking a look at next week to maybe jump into a swing trade dividend capture strategy. So the next stock here is CAT. This is a stock that's had some very good growth over the last few months here. Over the last week here, you can see it's at 4.01%. Over the last 1 month, 14.6%. So this stock has been climbing quite dramatically here, 30.74% over the last 3 months. 1 year, 86.79%. So this stock may be a little bit too pricey right now to jump in. We can see the PE ratio on the bottom here is 118.69. That is very, very high for this particular market segment. It's got a good dividend yield, 3.321% currently, although that will be a little bit lower given that the stock price has trended up a bit. And this is a blue chip company. It's a very large company, as you can see there, with the market cap, $101.32 billion, but not quite sure right now the price is worth jumping into this particular stock. I can see a lot of room for pullback, especially if you take a look at the graph over the last 5 years. You can see that quite dramatic peak here over the last 1 year here, 86.79%. So not quite sure I would jump into the stock. I'll be taking a look at the stock next week, but this may be a little bit too pricey. I think it's a great long-term buy and hold. It's a blue chip company, large cap company, great dividend yield, all of the characteristics that I like to get into with my buy and hold stocks, but just not quite sure if this is going to be too much risk for the type of reward that you can get a payoff on. So I'll be taking a look at this stock, but definitely won't be one of the preferred trades for this next week. And the last stock is a stock I already have in my portfolio, which is this stock here, Procter & Gamble, PG. This is also a very good blue chip stock, a buy and hold stock as well. You can see on the bottom here what Procter & Gamble is all about, consumer packaged goods. This is a very, very strong company. You can see the dividend yield is very nice there, 3.096%. The dividend yield for this next dividend capture will be around 3% or so, so about the same as it was on the last dividend payment. The PE ratio, as you can see, they're very reasonable for this market sector. It's a large company as well, $227.34 billion. And this will be having a dividend, ex-dividend date on the 18th of next week, payment date 15th of February, about a 3% or so dividend payment. And quickly going back to CAT, I did not say the dividend, ex-dividend date will be 1/19, payment date 2/20. And again, about a 2 to 3% dividend on that stock. So this is a very good stock. You can see over the past 1 year here, quite volatile here, up and down, which is not a bad thing. This is actually the kind of movement you want to do with a swing trade. Have some limit buy order places here, as well as some places to sell off the stock. Over the last 3 months here, it's down 2.71%. Over the last 1 month, down 1.28%. Over the last week, it has trended down a bit. So I think this will probably be one of the preferred trades that I will get into. It's a stock that I already have in the portfolio, and I would not mind averaging down this stock as well, putting a little bit more capital for a longer-term buy and hold. But Main, MAIN, is the number one stock I'll be taking a look at. PG is the second, and CAT will be the third, although I do think that is a little bit pricey right now. So those are the 3 stocks I'll be taking a look at next week for dividend capture swing trading. Again, MAIN, Main Street Capital, PG, Procter & Gamble, and CAT, Caterpillar. So let me know what you guys think about those 3 picks. There's a number of other ones I'll be taking a look at as well, but these are definitely 3 of the safer picks that I'll be taking a look at for next week. So yeah, just wanted to update you guys on that. And kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. And until the next video, we'll see you then.